Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up, and we are now on Tuesday, October 4th, 2018, and folks, it's 6:30 p.m. Central Daylight Time, one of the longest days for me in a long time here. We've put all new computers in our operation, and you can imagine the nightmare that it's causing us as you've got to get everything reset, but these are pretty powerful. All right. No matter what I'm going to tell you about the markets, here's how I'm reading it. Tomorrow we get the employment data. Every piece of data that we keep getting is strong as can be, and you know that one of the things that the market has done is it's run up on interest rates quickly back towards the 3.2% area, which has scared traders. So you got a break in stock indices, you've had a rally in the dollar index, and obviously big breaks in the bonds and notes, as we'll see on the futures contract. But when that report comes out tomorrow, the market's already building in 185,000 jobs. It's looking for an employment rate of about 3.8, 3.9% unemployment, and it's looking for 0.3 of a gain on the wages. Wages are what people are going to look at. The other factor is, what if you get a number that takes into account Hurricane Florence? I mean, it did happen at that time frame. A lot of people are out of work because of it. What if the number's sharply lower than 185? It's going to be a crazy day. So I welcome you to the opening, but it's going to be wild when the report comes out. As you can see in the S&P 500, we've backed off from that 2934 level in a corrective mode. This is what I'll call the trend line of the market, connecting highs and lows on a closing basis. As you can see here, the market stepped out today and broke through the most recent support, giving it a pattern, if you look at it, of a higher high and a lower low. The swing line measures that. You can see it here, but it's so much easier with the swing line on. That means you're not trending. If you believe, as I do, that trends are made up in a downtrend of lower highs, lower lows, plural, you don't have it, and you don't have it on the other way to the upside. You have nothing right here. If you look at the 18-day average of closes, the market had been holding it very nicely all this time frame, and today it gave up, and it's still under it at this point. Where did the market go to? If you knew nothing else, I'm going to take you there. Here's the market yesterday. If you take out this number, you break the pattern of higher lows, higher highs. I would have thought early support, the 18-day average of closes, this market paid no attention. It made a slice right through it, went down to the lower Bollinger Band. You hit 2887. The pros, I think, stepped out of the market against that lower Bollinger Band. By the end of the day, you were 20 points off of that. And if you look at momentum, it's pointing down. So we have a market with downside bias because it's under the 18-day average. Momentum's pointing down. You're not in a trend, and you're caught in these Bollinger Bands going into an employment report. What about the NASDAQ? You know, nothing else. One of the things I tell you, the first challenge on the upside of a Bollinger Band or the downside is what I teach in my charting course. And by the way, we've got that special on my charting course where if you use the word save 40, you get $40 off on it. It's $129.95. It's $89.95 with the save 40. And after tomorrow, the price goes up to $149.95, and I don't honor the discount anymore. Lower highs, lower lows, right to the lower Bollinger Band and held it. Again, I think the pros took advantage of that. Markets got momentum down. The difference here is now you've got lower highs, lower lows. Trend down, resistance back at 75.82.5, and you've hit a downside target. If you were to break again, then the 100-day average could be the next support. What about the Dow? This is the strongest still of everything. Higher lows still. Higher highs, momentum is turned down, so now you've got divergence in the market. You got momentum down, bias up, but the trend is up. In the Russell, excuse me, I'm just going to turn that off because I don't want to redo this at this hour. Here we go. As we take, it's my wife, she'll not be happy with me. lower highs, lower lows, riding the lower Bollinger Band. And as you can see, the market is just drifting here with the momentum locked in bearish. Here's what I think happened today in part. I think the pro traders sold short the VIX by selling the calls when the market hit the upper Bollinger Band, and they'll be looking to see if they can catch the market back either at the 100-day average or the 18. Obviously, it's a dangerous play going into the employment data, but that's what I think happened. In the bond market, don't be surprised to see the market try to get back to the right-hand side of the lower Bollinger Bands. Momentum is still down. You're in a downtrend. Will the market get over 3.2% on the 10 years? One of the questions. It's trying to hold right here. It's oversold, hit its objectives. That doesn't mean anything. You can get anything out of a market like this right now. TLT, look at how it came apart. Now that's 2 days in a row under the lower Bollinger Band. And if we look at the momentum here, both numbers are under 20. They were under 20 yesterday, but not the day before. You're in oversold territory, begging, I think, to come back above that Bollinger Band. But what if you get data that's super strong? Who the heck knows? That's why tomorrow's so dangerous. In the dollar index, 3 days in a row to the upper band. That's the resistance, and that's the concept. The lower band, when it's first hit, is support. The upper band, the first challenge, is the resistance. Then the market can change its character as it either rides the bands up or to the downside. In this case, you're in an uptrend that is overbought, has hit its upside targets. In the eurocurrency, it's the exact opposite. Downtrend, riding the lower band, oversold as can be. British pound, lower highs, lower lows, 3 days in a row hit that lower band, trying to bounce away from it. Obviously, we all know about Brexit. I won't go into it. But look at how you're in the sideways action. You've gone from the upper band to the lower, and the markets are sort of stalled right here. Japanese yen, trying to stick its head up right now. If it gets some numbers that scare it tomorrow, it could lose the embedded rate reading. If not, if you didn't have that report, I'd say that the bears are going to be all over this market on any rally. I just don't know what to say about the employment data. In Bitcoin, I've pointed out that you're just going sideways again. You've given up on a trend. You're in an uptrend. You've got the higher lows, higher highs. But you've gotten up to your resistance area, fell back to support, and you're just sort of spinning your wheel as the market's going sideways. The bigger picture, until you get back under that $6,000 level, it appears to me that at least for the moment, the selling is abated in this market. Obviously, in the Brent versus WTI crude, you've seen the big edge in that market. Tonight, we're looking at the Brent, and this is the December. The market's got to these upper Bollinger Bands. This is called running it. See how the prices did that? But now you're starting to see, for the first time, where that red line is starting to fade. If it closes under 80, I'd look for price in the 18-day average to possibly make a run. Has it done it yet? No. So who's in control? The bulls all the way through. In WTI, look at how this red line is now turning, and right now, intranight, you're losing that embedded reading. I think the pros are coming out tonight of some of their longs right here. Bit of fear, and if that keeps slipping, I wouldn't be surprised you pull back. Remember, you've gone up a big number in this WTI. There can be a surprise at any time. I realize about Iran. I realize what the market's done. I'm just a chartist. I take the name off the chart and I just look at the pattern. Gasoline, still with the embedded reading. I'd keep my eye on it. Until you lose it, it's still bullish as can be. Nat gas, still with the embedded reading. Until you lose it, you're still in the bull camp in this market as well. And I'm writing a silver report. I began it today. We had to stop later in the day as we're putting our new computers online, and you're already on our new computer. If you're watching this, this is what it's all recorded with. You can give us a call to get the report. I hope to have it out tomorrow. If not, I'll finish it over the weekend. And I haven't mailed it. Obviously, I haven't finished it, but I've done a lot of it. So you can call me, that number. You can get to our website, sign up for it there. You'll see our free offerings on our website. You can click up here at any time. That'll take you to the website as well. I'm Ira Epstein. You have a great day. Be sure you sign up for the Silver Report on the website. It's not published there. It's emailed. You have a good night.